Hello, everybody. Time for this week's Eco Investment Update. It is Monday, the 13th of April, 2020. Welcome to all of you. Spotlight on gold and silver. And almost as if on cue here, we have seen a dramatic resurgence of gold and silver. About 10 days ago, we had a very interesting shakeout. I call it a shakeout in the gold and silver market because that's exactly what the big players do in a relatively small market like the gold market that's traded on the Commodity Exchange of New York on the floor there. Of course, they're electronically trading now. Every time there's going to be a big, long, sustained move, there almost always seems to be a short-term shaking out of the weak hands. And that's exactly what happened when silver did a goofy plunge down to, what was it? Let me just double check that. It did a plunge down to like, I don't know, $12.50 or something like that. And gold had a pretty big drop too, but instantly they recovered, and now they've gone on to pierce what appears to be a 7-year peak, especially on the gold at $1,783 an ounce. This is what I've tried to impress on people. We have a tremendous amount of stimulus that's been unleashed into this market by way of the federal printing press. Okay, there's no other way around it. It's certainly the money that's underwriting municipal bonds, corporate bonds, state governments, businesses, wages. All of that money is quote unquote borrowed against the future with deficit financing, something on the, I don't know, the budget's going to be so far out. It's almost like you have to go back to World War II to find a time with an equivalent budget blowout. But of course, at that time, we were producing material hand over fist to fight wars on two fronts. We don't have that situation. We have a war against the virus here. But all of that money that's been printed and pledged creates automatically, by virtue of its creation, immediately causes those dollars that are already out there in existence to be worth some percentage less than they were before the magic hand of the Federal Reserve and the Treasury do their thing. Now, I'm not saying in time, don't get me wrong, there aren't many tools left. I mean, the Fed can't cut interest rates anymore, right? I mean, we could have a negative interest rate environment. So there's not much more they could do except go so far outside of their mandate and just hope to hell that constitutionally in the future that everything they do squares with the law. Who knows? There's a lot of people that are very concerned about some things that they're saying, but these are extraordinary times. But the mere creation of all of these trillion, $4-5 trillion of pledges, the Treasury in there and the Fed buying up low-rated debt, junk bonds, everything. Okay, remember the mandate is you're supposed to have good, solid assets before you lend against it. Well, we just threw that playbook out the window. All right, this is what I call the kitchen sink. This is the Hail Mary of economic times right now. But the practical aspect is that the gold and silver market appear to adjust to that. Now, silver is nowhere near, of course, an all-time high because it struggles partially with the fact that it is certainly an industrial metal and an important one. And industry is certainly down quite a bit, but it's gradually, gradually the people that are starting to salt away the silver are doing their thing, and they're tipping the market again towards a bull market, which will follow in line with the gold market here. The thing you have to bear in mind is it's not the precious metals that are rising. It's the dollars and the purchasing power of the dollar that's going down. Okay, gold and silver stay fixed like a rock. and other things in the world move against them. Their level rises and falls. Well, now starting to take more of those dollars to purchase an ounce of gold. Why? Because it's adjusting to the reality that there's a lot of dollars out there, many more than before, floating around. Can we anticipate higher prices for the metals? I think that we can. I don't see it suddenly change. Sure, there's going to be some air pockets. There's going to be some dramatic drops. Remember, it's still a relatively small market. It can be manipulated, but certainly you would have to say at this point in time that our expectations that were outlined here a couple weeks ago about the gold and silver market are coming true. They still remain as the perfect preservers of capital and wealth, and I imagine that they always will. So, okay, everybody, keep your eye on them. In my opinion, it's not too late, especially I think silver's lagging so far behind now. I will put this caveat out there. If, which may very well happen, we have another fierce leg down in this equities market, the stock market, that pulls the Dow down to my target of about 15 to 16, somewhere in that area, 15 to 16,000 on the Dow. Of course, in the short term, the metals will be hauled down too in another wave of selling. But I guarantee you they'll have a lot of bounce coming out of that again. Thanks for listening and watching, everybody, and have yourselves a wonderful rest of your week.